Let's talk to Mike van Dulken. He's the head of research at Accendo Markets. Morning to you,
Good morning.
Mike. We're going to talk about the S&P 500.
Yes.
You sent the chart. Before we kick off, I read with interest from the Investors Intelligence this weekend that the bullish percent readings are effectively at record highs, levels not seen since 1987. In terms of standard deviations, I read lots of reports that the S&P is 2 standard deviations overbought and absolutely ripe for a correction. Are these just fearmongers? Has this got more? Is this got more sort of?
I mean, the stats are what the stats are.
Yeah.
I mean, that's the good thing about data like that is it is what it is. It's clearly reported. It's fairly recent. What it doesn't do is tell us, what the rest of the market is feeling in terms of, retail people still buying up the US bourses, optimism surrounding the Trump tax cuts, and pretty much decent results so far. The US banks have come out with one-off charges for the end of this year, but pretty much a favourable tax rate going forward. Trading still under pressure, but against very tough comparables. So it's kind of easy to adjust for, essentially bad numbers for this year, facing a very big benefit from the Trump post-election rally. But you just got to look at these indices; they're still knocking at the highs, and this is a very clear example here. It's difficult to argue that this is an imminent breakdown until it breaches something like 2780, maybe 2770, in which case the bias remains to the upside, and that could be a very short-term bullish flag from 2780 to 2810. If that bounces from 2800, we could be at 2820 back at the ceiling of that rising channel before we know it. I mean, look how quickly the Dow put on 200 points just after the Martin Luther King Day holiday.
Somebody was saying that the latest 1,000-point rise on the Dow is that
One of the
quickest ever done.
In history.
But what I used to do when I was sort of advising people, I would say actually turn the chart upside down if you're confused about the trend.
Yep.
And if you turn that upside down, you would be in a clear downtrend. But equally, this is a clear uptrend, isn't it?
Absolutely, yeah, quite right.
In terms of market tops, you've been in the markets for a long time. What would sort of convince you that maybe we were in some sort of top? The textbooks again would say a break of a key support line, for example, a lower high. Is there any sort of tricks that you would be looking out for?
I mean, I'd be looking for. So we've got a down candlestick yesterday, the red one. Now we've seen some tests to the upside for this is 3-hour chart, so sorry, this is 1, 2, 3, 4, about 15 hours worth of tests of 2807, unsuccessful for the moment. If we get another set of red candlesticks closing that period to the downside, a break below 2790 would put the channel floor in jeopardy. You'd still want to probably look for a breach of 2780, which would be the overnight lows. But these are still very small moves.
Exactly. But you wouldn't go short there with conviction, would you?
We're only looking at 2 weeks worth of the S&P there.
Yeah.
Is it a correction that takes us back to levels we saw 3 months
2 weeks ago or
Probably
3
not necessarily.
months,
Hence, as you often point out with the charts I bring in, they're bull or bear traps.
Yeah.
And I think you could easily see people getting sucked in thinking this is it, and it's happened so many times in the past. In which case, just a minor move.
If you look at that chart, okay, and if you didn't know what it was a chart of, you would say you would have to be long that market, wouldn't you?
Yeah, I mean, the only thing against that is it is only 2 weeks old. But for the moment, it's a good start to the year. As January goes, so does the year.
Yep, absolutely.
As the old adage goes. For the moment, betting against that, I think, would be a bold move.
Understood, Mike. Thank you very much indeed.